Hey all, welcome back to another daily price action analysis show. In today's analysis, we'll be covering the S&P 500 as well as the stocks that moved the market today. The S&P 500, as we anticipated in yesterday's analysis, had a big gap up, made new highs above this. We had this breakout above that particular resistance, and that led to new highs. And after we made new highs at 557.18, creating a new resistance level there, what we did was we pulled back down, we sold off to yesterday's resistance level, turning that into support for the remainder of the session, and closed very strong with a wick candle reaction above the prior day breakout that is now turned into support. So in uptrending markets, when this happens, this is a great indication that the market is having these healthy pullbacks and goes for another expansion tomorrow. Now, heading into tomorrow's trading session, as long as we hold 555.55 and have a strong reaction towards, let's say, 556.05, I would use as resistance, then that would be my confirmation for a bullish trade towards 556.92 intraday target at that resistance level. Now, I wouldn't fully target that. My first target would be 556.35. Second target would be 556, and then eventually 556.92. But the point is, even off of just 2 to 3 candles on the 5-minute time frame intraday, you can get an amazing trade in. So it doesn't matter how or how greedy or how long you want to remain in the trade. What matters is you get a high probability trade off of these reactionary levels. So what I do want to talk about is another, we also held this bullish ascending formation, this rising trendline support, and this is telling us that bulls are creating a higher demand after the sell-off, after each of those new highs followed by sell-off. So this is a positive sign that we are going to see more upside heading into tomorrow's trading session to retest 556.92 level and even try to break out the same way that we did here. Now that we have covered the bullish aspect, I do want to talk about the fact that the S&P 500 has been grinding up for some time. We are definitely trading at these very elevated levels. So I do want to note that any upside that you see from here heading into the rest of this week is very likely going to be a trap for the bulls, because the market is likely going to find a top here very soon and have a big sell-off reaction, a big correction back down to at least 550.09. So let's cover those levels on the intraday one by one. How do you find out, or how do you get a clue that perhaps this is what's happening ahead of time? So let's say that we get a breakout tomorrow and the trend resumes as usual. You have nothing to worry about, the market's going up. However, the moment you see that we retrace back down to 555 level and we break support below 555.56, you should also take into account that there's a great chance that there's not going to be a higher demand this time, and that we will follow through with a possible either double top or a head and shoulders, one way or another, one of the trend changing anatomies. So keep an eye out for this particular level here. Very important, 555.55. This is the midline. This is where once we get below, things can get very bearish on the momentum side for the bears towards 554.28 and then 550.09. So it is a good possibility that you can get an amazing trade at this intraday support at 554.28 once we retest it for a quick rebound similar to this one or this one, where you can get a really good trade in off of that kinetic rebound at that support level. But do note that there's a great chance if we come down to this area, yes, we may get a rebound, but I think the rebound will follow through with more downside towards this particular resistance level at 550.09. So in any market weakness, you can target this particular level at 550.09. And let's talk about the thought process behind this retest. You see how we broke out from this resistance level at 555.52. What happened was we went for new highs, right? And then we made a new high at 555.18. That's pretty good, right? And then on the pullback, we came back down, retested that resistance level, turned it into support, and now we are looking like, yes, we can get more upside heading into tomorrow as well as the CPI. So this is the concept. This is the same concept here, the same thought process. This was the massive breakout, the massive expansion that we had. And now we want a retest at that resistance level, turning it into support. And then that would be an amazing opportunity to catch the demand reaction to to catch the expansion away from that support level. Resistance turned into support. So I have been mentioning demand candles in the prior sessions, and I do want to explain it in today's session so that heading into the future sessions, you have a great idea of what I'm talking about. So when I say, hey, you guys, I'm looking for a demand candle on, if I'm looking at the intraday, then it'd be on the intraday. What I'm talking about is these particular candles here, these demand candles. So this does not count as a demand candle. This green reversal there, it does not count as a demand because it does not engulf the big red candle, the big supply candle. So this right here is a demand candle because it engulfs the prior green and red candles and pretty much is a massive demand candle. That's why we call it a demand candle. Wait for price action to react, and then I enter. So once the price action reacts with a demand candle, then I enter the bullish trade. Either it be on this particular candle. If I enter on this retracement candle, right, then I would enter on the retracement. Once I see it coming back up above the 50%, I would grab it on the discount there. But my stop loss would be at the break of the demand candle every single time. I never keep positions below that because that's very dangerous. So as a stop loss, to manage risk, you always want to have your stop losses at the break of the supply candles. So if you enter here or whether you enter right here, they are all good entries. It's really dependent on whether the trader wants to be an aggressive or a conservative trader, but your stop loss remains the same, okay? Protecting your risk remains the same. This is something that all traders share in common. We had a lot of wicks reacting to that. So heading into tomorrow's trading session on the intraday time frame, if we see a big demand candle breaking above, let's say 556.15, I'm going to enter for a nice bullish trade towards 556.92 resistance level. And if I'm watching on the sidelines, let's say I don't want to enter because price action is up too much and I don't want to be holding the bag at these levels or even getting trapped in any positions, what you can do is just simply wait for the break of 555.55 to take a bearish opportunity with the bearish momentum towards 554.28. And it's important to keep in mind that if you don't want to enter there and you're a bullish trader and you don't want to trade the put side below 555.55, then you can wait for this support level as a bullish trader at 554.28 for bulls to retest and then buy the reaction candle off of that support level and get that nice day trade in. To keep it simple, below 555.55, we are anticipating 554.28, and we anticipate a kinetic energy rebound there, a kinetic rebound. So if we do get that rebound and you see that reaction right here, any candles like this one, you can enter on the trade, get a really nice day trade in, secure the profits, and then be ready to trade the downside if we break below 554.29 for a bearish momentum trade down to all the way to 550.09 level. So that's my analysis for today on the S&P 500. Let's take a look at QQQ as well. QQQ is, this one is very, very simple. Honest to God, you guys, you can get a really good trade in off of this one. So heading into tomorrow's trading session, you can buy a call on QQQ if you see that QQQ is trading above 498.02 with your target at 500. Now do keep in mind, if we sense any weakness around here at 498.60, or let's say we come back down to this level, which is yesterday's which would be today's closing price around 497.70. If we get below that anytime for the next 3 days, anticipate this downtrend to be broken. Sorry, this rising trend line to be broken, which is the neckline for this potential trend changing head and shoulders here. That can send tech prices. Let's take a look. So we are anticipating that bulls could come up to this particular resistance and show a lot of weakness. If they do show weakness and they print these big supply bars, that would be very bearish all the way down to here, all the way down to 490 area, and even 486 for a nice correction by the end of July, or heading into the third week of July. But so far, team, I do want to note bulls are holding the line here. And as long as they take this supply candle out on the hourly time frame at 498.29, I think bulls are going to continue to advance higher, especially with all of the time frames being bullish. Now, yes, the time frames are bullish, but the market doesn't just go up in a straight line. And this is why I think we should be prepared for a big correction to come anytime soon. Maybe not a big correction, just a moderate correction down to the 550 level, turning that resistance level level into support, collecting the liquidity from there, and then creating all the way, creating room to retest all the way up to 557 again with bullish momentum.